What's going on, everyone? We're back with another video. In today's video, we're really going to dive deep into the technical analysis method that I use to trade the S&P 500 futures every single day. And along the video, I'm just going to give you guys some tips and tricks that I use to stay ahead of the market in terms of both reading the charts right and also just keeping my mind in check, because after almost a year and a half of trading, there's some things that I've learned, some hardships that I've learned that are very, very valuable. So, without further ado, let's just get into the charts. The market opened right around here. We had a lot of choppiness before that. There actually was one trade that I almost took pre-market around 6 a.m. Obviously, there was a big downtrend, so we always draw our trend channels. This isn't the most nicely fitting trend channel, but it does look pretty valid. And if we are counting from this low right here, we like to look for second entry shorts in a downtrend. So what's the second entry short? If we're counting from this low, we're going up. We have a first entry short once that bar breaks below the one previous to it, first entry short. And then when we break above, we have a second entry short because, once again, the bar broke below the one previous to it. However, this is above the EMA, the bars are pretty stacked, and it doesn't look like that great of a trade. So I skipped it, but we kept going down, and we had a nice lower high following the second entry short, which is basically a confirmation that the selling pressure is still present. So I skipped this trade in real time, but looking back, it was a really, really nice trade, and it ended up working, and you could have got a pretty nice runner from it. So once again, we're looking for second entry shorts, and we have one right here. We have a new low. We went up. We had a first entry short. We went up again, and we had a second entry short. Nice bearish bar at the EMA, but this is right around the market open, so it was a really fast trade. But it would have worked out for a 1 point scalp, which is what we look for in the method that we use. So once we finally break out of this channel, we don't expect to look for longs just yet, because a new low has not been tested after the trend channel has been broken. So with that said, we had a trend working up, we had a break of that trend, and we had a new high signaling that that short-term uptrend is over. But this wide downtrend is not over yet, or at least we don't suspect it to be over yet, because there was a break and no new test at the low yet. Now, you could draw a trend line something like this, but because the upper trend is just a counter trend, you really want to stick with that thin trend line, because look how much nicer it fits compared to the one I just had drawn. So like I said, we had a break, new high. Now we can look for second entry shorts once again, or failed second entry longs, because in downtrends we look for second entry shorts, in uptrends we look for second entry longs. So we had a new high here, we went down, we had a first entry long by one tick, we went down again, and we had a second entry long right there. Now, because we already said that the uptrend had a break and a new high, we don't want to look for long entries. So whoever took the second entry long got trapped by this very bearish bar, and I would have entered it if this signal bar would have been nice, would have been bearish, but it was too bullish and I wasn't able to enter. But it was a trap trade because it was a failed second entry long in a downtrend, still looking for this new low. So we're going. We're looking to test these lows, and we bounce out, but it just ends up leading to some choppiness, and we finally get a test at the new low. So now, at this point, we're thinking, okay, we had a break in a new low. It's pretty strong of a downtrend just because we had a lot of price action or a lot of price movement going down. but it is getting kind of choppy. So it's starting to look like a range structure, at least temporarily. But we do keep pushing lower and lower and lower. Unfortunately, there's not many entries, but we do get one here. We have a new low. We have a first entry short. We tested the EMA once again, double top, and a nice bear signal bar. Second entry short. Now, like I said, we did have a break and a new low. This is at the EMA. It's a nice bearish bar, and we did keep making a new low after new low. So you can take this trade. It is a little congested here, but because of the test at the EMA and the double top, you can argue for that trade. It is a bit aggressive, but it would have worked out. And we keep pushing lower. And eventually we do end up bouncing out, but there's no real great entries, and it just looks a little stacked. So now we can start thinking that, okay, we're either going to start forming a range, or we're going to start a trend in the other direction. But for now, we just want to draw our range just to give us a visualization of what prices are doing. We can add a midline there because prices do react to the midlines a lot of the time. And we can see that we're hitting these lows and we're reacting at this midline several times. And we do see a second entry long right here, new high, first entry long, second entry long. But because these bars are so stacked, I would not recommend taking that trade. And let's see if it would have worked out. 46.25. It would have worked out for 1 point scalp, but like I said, because there's so many bars stacked, you just want to skip that trade. And we just keep moving along, keep moving along, keep moving along. And even though there's so many setups throughout the day, one thing that's very important to keep in mind is just to be patient. One motto that I always tell myself is just to take obvious trades. In my mind, before I'm entering a trade, I think to myself, okay, is this an obvious trade? Because at the end of the day, the best traders are not trading that much. They're taking maybe 2, 3 high quality setups a day, even though throughout the day there might be 10 high quality setups. Some days they might all look like 99% setups and you might take them all, but most days you're going to be wanting to take 2 to 3 trades that are really no-brainer trades to take. Otherwise, it can be a painful journey, which is why most traders do end up just quitting, even though this method is not a foolproof method, but these setups, if you know what you're doing and you can read the price action and you can understand what prices are doing and where they are headed, you can make a lot of money if you stick to those rules. If you don't, like I said, it's not going to be a very fun journey. Now let's see if we can find any more good setups. We do break out of this little range and we just start working sideways again, but we have a lot of support right here. And in real time, I was looking at this structure thinking, okay, even though it was a downtrend, we closed the day yesterday up here and we opened down here. And a lot of times, no matter how far prices get away from that close, prices do want to test it a lot of times. So once I saw we had a range after the break in a new low and we resumed the uptrend, I was thinking that prices could resume more upward momentum and reach these highs of the day, which we did end up doing. So I was looking for long entries at this point of the day. And this was a trade that I took. It was a bit aggressive, but it comes with experience just spotting a trade like this because we had this uptrend. We had a break. We're looking to test the new high. You can tell that that's happening because if the trend was like this, like I said, we sometimes look for the thin trends, which can be more accurate, especially when we are looking counter trend like the one that I was talking about right here. But in this case, we already had a break and a new low of this downtrend. We had a lot of congestion, a range structure, and then we went out the other side. So once we had a break and a new high, I was thinking, okay, this might be the end of this uptrend, but we had a lot of support at these levels. So in my mind, I was thinking, okay, if we get a failed second entry short above the EMA with a nice signal bar, I'm going to take that trade because it signals that there's a lot of people thinking the same way that I am in terms of, okay, we went to these lows, we can test these highs, and those who were looking to sell the market weren't able to break below the EMA. So we had a new low, we went up, we had a first entry short, second entry short, failure. So as soon as this bar closed, I put my limit order in, and I ended up getting a very, very nice runner. I had 4 contracts on the runner. 2 contracts I got out around 6.75 points, and I ended up taking another run around 16 points. I think what I'll do is put the live trade in another video because I think I was in that trade for about, let's see, 9:47 Pacific time. Basically like nearly an hour, maybe 45 minutes because prices were kind of slow. And we can see that, okay, this uptrend is looking very strong. So we want to widen our channel and we're looking for second entry longs. New high, first entry long, we went low again. Second entry long right there. But this is the signal bar. It's not a great signal bar. It's bearish below the EMA. So you want to skip that trade. And if you would have taken that trade, you actually would have got stopped out because the rules were not followed. It wasn't a great signal bar. There was also this short-term downtrend in play. So we're expecting a break and a new low of that downtrend before testing this high because we had a break of this trend, no new high yet. And we started chopping around, and we did eventually break and test these highs. Now, the market's still open for a few more minutes, 3 more minutes to be exact, but there were really not many great trades after this. You see a range looking structure. But like I said, because I was thinking the same thing in terms of why I took this long here, and I was looking for another long entry somewhere around here because I knew that prices really wanted to test this high again. For the same reasons as I stated, we had a break of this trend, no new high yet, and the bears couldn't break below this EMA with much momentum. So here we see we had a new low, first entry short, kind of a hidden second entry short failure, but these bars are very stacked. You could argue for this trade, but you could really wait for a lower high in this case. So that's the real second entry short, failed second entry short, new low, first entry short, second entry short, failure, nice bullish bar at the EMA, and it would have worked out. And that's going to wrap up the video, guys. I hope you guys are enjoying the content. Subscribe with post notifications so you don't miss any of my videos. Peace out.